And have a great day. Well, a couple of stocks deserve mention in pre-opening. Tata Steel is under pressure, post its numbers down almost 5%. In fact, LIC Housing Finance as well, with profitability took a big knock, is down quite a bit. Muthoot Finance is under pressure as well. V-Mart Retail saw a fall in their EBITDA, so that stock is down and out. And on the upside, you have something like a JK Paper and Apollo Tyres that are reacting well to their numbers and the commentary from the management. But Max Life Insurance is in focus after its Q3 earnings. The VNB margins came in at around 39%, which was well above street estimates, but the annual premium equivalent is down 5.2% versus last year. In more news on life insurance, as we know, the government in the budget announced taxing income from large ticket savings products. To discuss this, we are joined by Prashant Tripathi, the Managing Director and CEO at Max Life Insurance. Mr. Tripathi, good morning. Before I ask you about your own business, you have had some time to spend over the budget announcements and the impact it would have. On this announcement that, the taxation will be on higher ticket sale products, what do you think would happen to that category at all? I'm sure it won't disappear, but do you see a lot of movement around between products, and what is your assessment of what the impact could be?
So yes, I mean, it is definitely a dampener from industry's perspective. As you know, such a thing came for ULIP about a couple of years ago, where more than 250,000 ticket sizes were taxed. Fortunately for us, we didn't see any impact. Actually, there was no impact. In fact, the proportion of more than 250,000 policies increased in our portfolio. So I think the trust and the belief in life insurance, the product category, is definitely beyond taxability, number one. Number two, as far as this particular mandate is concerned, I would like to share with you that more than 5 lakh policies in our portfolio is close to about 8 to 9%. So it is not a very significant part of our portfolio. And I think if we were to look at our overall customer segment, we target the 5 to 20 lakh kind of customer segment predominantly, and that is a very fast growing segment. So the deficit that might come from more than 5 lakh ticket size can be covered up through refocusing it on our core base. Yeah, that is possible. And this proportion looks 9% only this year. Before this year, the prior years, this number was between 5 to 6%. So it is some bit of impact, but it is not as humongous as how markets have reacted. You have seen the impact on share prices.
So do you have an impact on what? Do you have an impact on what this could be for your VNB? I mean, you did mention that just about 8 to 9% is the exposure that you have to more than 5 lakh products. But can you tell us what the impact would be on the VNB?
Yes, it's typically the same or lower, because when you give the product to large ticket sizes, typically the margins are a tad lower because it's a different product construct that large ticket sizes buy. So VNB will be smaller than 8 to 9%.
Got that. Although isn't this as a percentage, as a proportion of the non-par savings book, a better way to look at this in terms of impact, Mr. Tripathi?
You could,
and that would be much larger, right?
You could look at it between par and non-par both. So par also is going to go through the same. So if we were to look at a weighted average, I think the weighted average will come similar to overall company margins. So the number that I'm giving you is perhaps clear.
There is, of course, the immediate impact, right? But does this also, in a way, curtail the potential for upsell opportunity for customers? I mean, if somebody was paying, say, 2 lakhs to 3 lakhs in premium, I mean, you had the opportunity to sell that person more, higher value policies later on. I mean, that kind of upsell opportunity goes away with this.
Yes, Prashant. So let's understand this a bit clearly. Whatever was done before 1st April 2023 is gone. So really, we are looking ahead, which means if somebody buys a 3 lakh policy, a traditional policy in, say, FY24, and then tries to buy 3 more lakhs in FY26, that definitely comes under the tax bracket. But whatever was done earlier is not going to be counted, number one. Number two, such large ticket holders, we haven't seen significant penetration upsell opportunities. And generally, upsell opportunities do take place in smaller ticket sizes. For example, on average, our customers have 1.2 policies with the company. So, upsell opportunities on very large ticket sizes is a bit lower, number two. And number three, I think there are ways to mitigate this. To your question on what is going to be the short-term and long-term impact, I think there are ways to mitigate this. So I'm reasonably confident that whatever 8-9% that we're talking about
But
could definitely.
Mr. Tripathi, is it as simple as that, 8 to 9%? I mean, that's the point I'm trying to understand. I mean, doesn't it? Because the number of policies sold by private insurers over the last many years is very. I mean, the growth has been very, very. I mean, 3-4% or so. A lot of the sort of growth and value has come from higher ticket policies. Now, it's a question of the addressable market for insurance companies in that sense, isn't it?
So let me just talk a little bit about this, Prashant. More than 5 lakh ticket sizes are very few. I think about 2% of the customers, really. So honestly, we're not talking about a very large number of customers. So really linking it back to our 5 lakh or more than 5 lakh policies, the biggest drivers of growth in the industry. The answer to that is no. Yes, they are a little bit, but I think that's something which the industry could manage. I was just coming, Prashant, on your question on how to mitigate. I think there are possibilities so far because there was no. Let me conclude. There was no constraint on the ticket size we were managing, and we were just focusing on the individual. I think there's definitely a possibility to look at the household, which could pass on the tax benefit to the household rather than one policyholder.
Okay, all right. And Mr. Tripathi, I'm guessing that Q4 will be an absolute stunner because it's the last opportunity for whoever wants to go ahead and pick up those big premium policies. Final question before we let you go. What's the status update with regard to the transaction with Axis? Point number 1. And point number 2, on the listed entity, the promoter's stake has come down to around 11%. Various reports indicate that it's up for grabs. Have you heard anything? Very quickly, sir.
So on the first one, you would have seen that Axis Bank has filed, and so have we. We have revised our contract that Axis Bank will acquire the further 7% at using the discounted cash flow method, and that's going to happen over the next few quarters. So that's the update. I think as Axis Bank is ready to do that, we will be happy to go ahead and pursue this. On the second one, I have no comments to add because there are such conjectures and such speculations just keep going on. So really, let's keep it at that level.
Okay, all right. Thanks so much, Mr. Tripathi, for stopping by and giving us your take on the holding as well as the resale.